Hot diggity dog. In studio is my man, Nick Geraghty of Ownership Mortgage, my favorite mortgage lender in town. How are you, Nick?
Doing well. How are you, Eric?
Top of the world.
Yeah.
We mistakenly are wearing like matching outfits
I don't know
today.
what you say about mistakenly. I thought we planned it. No?
Yeah, I look like just the extra large version, and you look like the pint size version, and it's pretty great. Nick, tell us about you. Tell us about Ownership Mortgage.
Absolutely. Yeah. So I have been a mortgage lender here in the community for a while now. Worked at a bank and another broker, but am now with Ownership Mortgage. We're a brokerage, so the difference between that and a lender is we have multiple lenders to work with. And that's actually a very important distinction, especially in a time like now, when lenders are updating underwriting requirements, et cetera. We have multiple baskets to pull from, if you will. I've been born and raised in the Fargo-Moorhead area, so familiar with our area, our market. 7 years of banking experience before coming to the brokerage world. So it's a little bit of my background and how I got here, but I love it, love what I do, love helping people buy houses.
Well, we get to refer you all the time because we're just confident in the work that you can do and that Ownership Mortgage can do. And Nick, these have been a wild few weeks.
Yeah, to say the least. Absolutely.
It's interesting. I was on air with Dan Michaels on KFGO 3 or 4 weeks ago, and we were talking about interest rates, and this was just as interest rates dropped. And I made this decree, like, if you're ever thinking about buying or refinancing, there's no better time than today in the history of days of all days.
Yep.
And now the last 3 or 4 weeks, we have seen a roller coaster. Talk to us about why.
Absolutely.
And talk to us about how we win in this situation.
Absolutely. Yeah, great questions, and I'm glad you bring it up. So as you kind of touched on a little bit ago, 3-4 weeks ago, rates were literally the best they've ever been in our country. But especially with everything going on, there's obviously a little bit of uncertainty. So while the Fed has done everything they can do to cut rates, it's been, like you said, a bit of a roller coaster as far as what the average 30-year fixed mortgage rate is. And a little bit of that is because mortgage companies are going through what a lot of us are going through. A lot of
uncertainty, right?
Exactly.
Yeah.
100%. Yep. And while there are people losing their jobs, that affects a lot of mortgage lenders and a lot of servicers who are relying on those monthly payments for their income. So what you're seeing from a lot of banks, a lot of lenders, is they're getting a little bit more restrictive as far as what they're taking in and what risks they're willing to take. So how that's translated to mortgage rates is within the past 2-3 weeks or so, rates have gone up a little bit.
And still under 4%.
Absolutely.
And then the historical average is about 6%. In the 80s, you were getting 10 to 18%.
Yep.
And so the fact that we're still under 4%, unprecedented.
Exactly. And I like that you bring that up because rates are still the lowest they've been for a very long time, since the early 2000s. And what I'm seeing a little bit too is as lenders are catching up, as they're getting adjusted to what's going on right now, you are seeing some leveling off with rates. So the average 30-year is still very, very strong. It's still a lot better than it was January, February, all of last year. So now is actually still a really great time to buy. It's still a good time to reach out about refinances. But it's an even better time to keep in touch with your lender if you're already working with someone. So
I shot you a message earlier this week. I have a 15-year mortgage on my house. My wife and I decided to go more aggressive with it. And I had caught wind that, and you get like a text a week from me just being like, hey, I just heard this. Because I want to find that win, Nick.
Absolutely.
I want to find when that hits that new low. I wasn't ready 3 weeks ago like I should have been.
Yeah, well, and you weren't alone either, so no one could see what was coming. That's for sure.
Yeah, and this is a cry out. Like if you're a deal hunter and if you're looking to save some cash, or if you're looking to buy in today's market, man, if you're not talking with Nick or another mortgage lender consistently, you're doing yourself a disservice. But we have bad news too for some people, don't we?
Yep.
Unfortunately, it's gotten more difficult to qualify for a loan.
Exactly. And you're seeing that a lot because a lot of banks and, like I said, lenders that are relying on monthly payments, now that there's less restrictions from the government as far as giving people the ability to potentially skip payments.
And that's good for like 12 months, isn't it, if I understood it correctly?
Yeah, and a lot of it too is, and it's going to depend lender to lender. So it's important if you have a mortgage and that's something you're wanting to do, to reach out to your bank or lender and ask what they're able to do for you, because it is going to vary lender to lender. But that is impacting people who are trying to qualify or maybe who were already pre-approved. So what's going on is you're seeing lenders starting to up their underwriting requirements. It's actually fairly similar to what happened after the crash in 2007, 2008. So you're seeing higher minimum credit scores, higher debt to or lower debt to income, percentages.
Right.
Which means they want less of your income to be going
They just want
debt.
less risky people.
Amen. Exactly.
But
yep.
I want to compare this back to 2007, 2008. And those of you tuning in, Nick Geraghty with Ownership Mortgage, and we're talking about the things that are happening with qualifications of getting a mortgage. And in 2007, 2008, the crash happened because banks were irresponsibly giving money. Has that been the case this time around?
It's actually not necessarily the case this time around. So while you're seeing some of these requirements get more restrictive, it's not necessarily because banks have been lending more risky loans. They're just worried about people not making their payments and their liquidity. So if I'm a bank and I have my requirements to still pay Fannie, Freddie Mac, still pay out your escrow payments, but I don't have money coming in, I want to make sure the new loans I'm writing are people who maybe have reserves or have the savings checking accounts and aren't going to need to be skipping payments. And that's why you're seeing requirements go up.
Yeah, and so you even told me that you had to call some people and tell them that they needed to stop shopping right now, right?
Unfortunately, it's my least favorite part of the job, but yeah, so if you had not already submitted an application, not an application, but you had not already been in a purchase agreement, even if you were pre-approved, you may not necessarily now be pre-approved because you were qualified under the old conditions. And while these new conditions just started within this week, some of those people who were qualified maybe are now not qualified and may have to wait.
So previously, to qualify for an FHA loan, and an FHA loan has more fees, it's more government supported. So if you have, if you're deemed maybe a little higher risk, FHA is usually the route you would go.
Yep.
I've heard that went from 580 all the way to 680, depending on the bank, depending on the provider. You obviously have options. You shared that in the beginning of our conversation, is that you have options for people. So you didn't shoot all the way up to 680, did you, Nick?
I did not, nope. So I have still some lenders who are around the 640.
Okay.
There's still one or two that are holding out at the 620 that aren't at as much risk right now. But
and that depends on their portfolio that they have, right?
Exactly, 100%.
Yeah. If you've seen the movie The Big Short, they talk about portfolios of the different risk of loans that you have, and it really lays it out well. And so those that are at 620 probably have a more healthy portfolio that they can take on a little higher risk.
That's exactly right. There may be the lenders that don't service their loans, that don't require the monthly payments for their income, or maybe just had more cash on hand.
Yeah.
So they're beating out a lot of lenders too, and that's why you're seeing such big fluctuation in rates. Is some are still okay, so they're outpricing everybody else. Some that are hurting are maybe increasing rate because they need the income or they don't have the capacity to take what's going on right now. So that's the beauty of the broker world for me, is if I have one lender that ups restrictions, I might still have another lender that doesn't.
You get to shop it.
Exactly, 100%. So it keeps me busy, that's for sure.
Well, Nick, you're obviously busy and you're insanely valuable to us in the Hatch Realty world, as well as everybody else who's choosing to work with you. So if people want to connect about their situation at Ownership Mortgage, how do they reach out to you?
Absolutely. So you can go to ownershipmortgage.com. Just go to contact us and I can get you there.
Find Mr. Nick Geraghty there, yep.
Otherwise, just nick@ownershipmortgage.com. Shoot me an email, questions, concerns, what you're going through, or just if now is a good time to buy, and I can help either give you some estimates or give you some insight.
Nick, mad genius. Good to have you in studio with us. Folks, we're going to go to break, but in the meantime, head to hatchrealty.com and start looking for your next house. This is Real Estate Radio with Erik Hatch.